One of the worst times to day trade is during the lunchtime when many traders take lunch, and that's a good time for you to stand aside. So to go further and elaborate a little on why I say this and to make the point, I want to focus more on specific time periods within the primary day trading session. Now this definitely applies to intraday traders more than anyone else, although when anyone enters or exits a trade, you're really acting on an intraday basis. So why do I think lunchtime trading is the worst time of day trade? Well, like everything else in trading, it has to be determined by your trading strategy and your personality. And if it works for you, then just do it. But for me and the vast majority of traders that we know here at Netpicks, the difficulties with trading over lunchtime are pretty clear. This is the time during our trading day when we should take the opportunity to take a break and clear our mind. Now, the E-mini S&P is running on a focus here, as many day traders are already familiar with this market. And I put together some basic average stats spanning a 3-year period to help illustrate my point about lunchtime trading. Worst time of day trade, 12 to 2 p.m. The stats clearly show that the average 30-minute volume and range bottom out about 12 to 2 p.m. Eastern time, lunchtime. So the specific time a particular market's activity hits its low point with its primary session will vary from product to product, and clearly it's likely to be very different for markets traded on exchanges in different parts of the world. But these stats are specifically for the ES. Now the other important note to make is that this is average data. There are going to be outliers on either side of the figures shown, and sometimes it may be the case that market activity is actually good during this period, and the length start of the period can also vary. But from these stats, we can draw some pretty obvious conclusions. We can say that the range potential is generally a little bit lower than it is earlier in the day and later in the day. We can also say that lower volume might mean there is less interest. And if you look at average volume per point over the course of the day during this period, it's roughly a third to a half lower than at the start and the end of the session. So what does this mean? Harder fills maybe, although the bid-ask sizes are also likely to be a bit lower. And there's less likely to be a directional movement. Getting into a day trade and being chopped up by random price action during a time you know you should not be trading can be pretty devastating to your emotional capital. These basic statistics give us a general feel for what it might be like over lunchtime, but to really show the kind of movement, you want to just check out the charts during those times. Now again, there's always going to be days when there are outliers in the data, and there are some really great opportunities during lunchtime. But if you're a person who's day trading and you're not an algorithm or you're not automated, you'll need some sort of break anyways during a trading session. You can't focus and trade effectively for the whole day. So it's really better to focus your efforts on windows of opportunity during the day where you find the highest probability of good trading opportunities happening. I don't say that trading can be draining at the best of times. And for me personally, being stuck in a poor position over lunch, it's probably one of the most frustrating things, especially if you know it's a bad time anyways for day trading. So when you are in a trade, think about what the time of day is and the kind of potential the market might have. Now, what is the 10 a.m. rule? This is a general rule of thumb, which means waiting until around 10 o'clock to place your trades. After the initial orders have cleared from the open, the market may continue to rally or decline or just take a sudden reversal. So by sticking to this rule and just watching price during the period between market open and 10 o'clock, you could avoid being caught on the wrong side of the market. This could obviously be considered a bad time to trade, but lunchtime still takes first place in that regard. And what about trading for an hour? Well, that's not a specific strategy we have at Netpicks. We do follow a trading rule that often times us out of the market quite quickly, and we call it the power of quitting. And what this means is simply setting a trading rule where you'll stop trading for the day. As an example, your POQ, the power of quitting, may have you take one winning trade and ending positive on the day. Some traders may prefer 2 wins and positive. It really depends on your system and the goals that you've set out for yourself. By analyzing your trade logs and your journals, you're going to find the best combinations of wins and losses that'll have you ending up positive on most days. And I can tell you that oftentimes our day trading strategies are actually 1-hour trading strategies or less, simply by following a trading plan that has the POQ as a rule. Now, the worst day of the week to trade, unless your system takes advantage of the volatility surrounding news releases, any day that has a significant amount of important releases, even inventory reports, would be a day you might want to approach with some caution. There may even be days where your system, for whatever reason, just doesn't perform. Now, the only way you can decide this is through comprehensive tracking of your trading actions. Your stats may find that on Monday, your system would be better if it followed more of a momentum style of trading. Maybe on the Wednesday, mean reversion strategies work better, as this is the day that those who bought on Monday take their profits.